Consolidated sales are higher than estimates, but I think after a nosedive, the stock has recovered. We'll clarify more on the profit adjustment. Tax credit of 142 crores versus tax expense of 1,560 crores year on year. Employee benefit expense came in at 16,650 crores versus 9,240 crores. So those adjustments done, I think the numbers look okay. And which is why against a poll, you're looking at consolidated PAT of 1,295 crores. But the stock has recovered from the low point. Initially, there was a big crack, and now it's coming back up. Sales are okay this quarter around. Let me just quickly go across to our fundamental guest and get his views on this earnings. Okay, EBITDA also. I think at the operating level as well as the profit level, we have to adjust for these tax credit as well as employee benefit expenses to get the real number. And I think Mubina has a better handle on that. Mubina, take us through the extraordinaries or the operating adjustments. How does the picture then stack up on comparables?
You know, Tanveer, there are actually no operating adjustments or any sort of exceptional expenses. Yeah, of course, in fact, there's that tax credit that has come by, but all in all, the numbers are disappointing only because there has been a humongous rise in the employee expenses from just about 9,000 crore rupees in the corresponding quarter all the way to 16,600 crore rupees. This is something that has actually hit all the numbers below the line. So be it an EBITDA, be it margins, be it profitability, all of them have been hit because of the doubling of the employee expenses from just 9,240 crore rupees all the way to 16,600 crore rupees. This is something that has been a big disappointment for Coal India. Otherwise, when you look at the revenues, it has actually managed to do pretty well, 26,909 crore rupees. So in all possibility, on the blended realizations front, Coal India has done very well, and naturally so, because in January they had taken that very steep price hike, but clearly looking at the numbers now, it doesn't look like even that price hike was able to cover that huge surge in employee expenses. Apart from that, you also have to take note of the fact that there was a tax credit, in fact, that did come by in this quarter of 142 crore rupees. There was a tax expense versus that in the corresponding quarter of 1,560 crore rupees. But still, nevertheless, of course, like I said, you know, there has been that huge hit that the profit before tax has taken. In fact, the PBT has come in at just a level of about 1,152 crore rupees, extremely dismal, you know, causing the EBITDA as well. By the way, the other income is also at 2,000 crore rupees, so that amount as well has to be stripped off. So we are talking about PBT coming in at 1,152 crore rupees, and of that, other income is 2,000 crore rupees. So naturally, the EBITDA figure is going to be extremely low, and yeah, mostly, like I said, it has to be attributed to the extremely high surge in employee expenses. Now, do remember, we did have, of course, in the entire negotiations that were taking place with the labor unions, with the wage unions, about the wage hike process. There was that wage hike given as well, but it looks like a maximum adjustment has come by in the last quarter of 2018. That's of course Q4 of FY18. It looks like a majority chunk of the hit has been taken in the last quarter. While the total expenses had more or less been calculated by analysts on the street, it's just that the way Coal India has essentially distributed the expenses is something that I think we would have to speak with them about. They had taken that price hike as well in an attempt to sort of help mitigate some of the higher employee costs, but clearly that as well does not seem to have worked.
I think more clarity on how they're adjusting for these expenses and including them in the P&L is what perhaps the market will be latching on to, because Mubina, you know, while the numbers as you go, you know, you take us through the details, look like there's been a sharp drop on the back of that massive surge or actually doubling of employee expenses. The stock has not done a whole lot actually. It's down about 1% at best, 282. And on the top line, they're okay. In fact, they have been better than estimates. Avinash Gorakhshekhar joins in with his review of the earnings. It seems like the increase in the employee expenditure has dented profits this time around, Avinash. But that was, you know, something that the markets knew. It's just the accounting practice of that expense which is bringing down the overall numbers. What's the call on the stock in lieu of these earnings?
No, I think the reporting of the employee cost has actually, you know, dented the operational EBITDA as well as the bottom line in this quarter. And I think the markets had a clue most of the analysts were factoring in this high employee cost, but the reporting, in one quarter has actually dented the profitability quite badly. So our sense is that, going forward, what could be the kind of incremental, increase in
Coal India is one